All right, everyone. Let's do some multiple choice questions here. Which of the following occasions is the earliest an audit report may be dated? Well, let's see. Generally speaking, right, an audit report is reflective of an engagement you've done, right? It's a reflective of an audit. It's reflective of the culmination of everything you've done. And we should know this by this point, right? We've gone through the lecture, right? We've talked about it. So the auditor's report should not be dated earlier than the date on which the auditor has obtained sufficient appropriate evidence to support the opinion, right? And that makes sense because, well, you're not going to date it, January 2nd, and the work's not done yet, right? You're not going to sign. It's essentially saying you're not going to sign off on something if the work's not done yet. And what is the work? The work is to get evidence to support an opinion. So it's kind of like a step in logic. You're not going to sign off on the completion of the construction of a house if the house is unlivable, right? So if we look at letter A, when all the working papers are compiled, assembled, and all superseded documentation has been deleted. Okay, I mean, those are things that should be done, right? Actually, no, now that I'm thinking about it, and this comes from personal experience as well, you could spend some time after you sign off on the audit report, getting the working papers compiled and ready to go. But what do you need to have done before you have the audit report? Well, you need to have that a sufficient appropriate evidence, right? Yes, it would be nice to have all of these things done, but it doesn't really need to be how it works. So, yep, we see letter B, which looks like a pretty solid answer. Now, what about C? When the auditor completes field work and all documentation has been reviewed. That needs to be done to get your evidence, right? But then you need to actually have obtained all that sufficient appropriate evidence. So, maybe you got to organize that evidence. So I'm going to cross that off. Again, this is a very straightforward sentence you got to memorize. The earliest the audit report may be dated is when the auditor, blah, blah, blah. So, very straightforward. And when the financial statements are filed with the SEC, not the case, right? Just memorize this one, right? We've seen it in a lesson. We've seen it. We'll see it, over and over, right? The audit report release date is when the retention period begins. The earliest date for the audit report is the date the auditor has obtained sufficient appropriate evidence. There we go. We're seeing it. We are good. Final answer is letter B. All right. A former client requests a predecessor auditor to reissue the prior year's audit report in connection with the issuance of comparative financial statements by the client. What is the predecessor auditor's responsibility? Just as a note, right, we've seen a lot of predecessor, successor auditor questions throughout the entire exam in different lessons, quality control and using the work of others. We'll see it in documentation. So don't be surprised when you see questions like these pop up because, it does involve everything, right? Predecessor auditor, this whole situation will involve situations involving the reports, the entire engagement, everything as a whole, engagement acceptance as well. So not a shocker to see something like this here. So what is the predecessor auditor's responsibility? So what is the responsibility of the auditor who audited the client last year? Well, is it to audit the current statements? No, right? They did their part. They audited year one. It's our job, us as the successor auditor, to audit the current year statements. They're off the hook. They did their one part. They audited last year's, so good for them, right? They're not going to have to audit this year's. That would just be a little unrealistic, right? Like, hey, you did my taxes last year, so you have to do them again this year. It doesn't really work that way. Consult with the client's legal counsel to determine available remedies. Remedies for what? There's nothing really to get a remedy for here. So request a predecessor auditor to reissue the prior year's audit report. So, there's no damages being done. So I'm not really. Yeah, I'm not. I'm just kind of drawing a blank at why we would choose letter B. I'm going to be honest with you. Review the previous report and make the necessary changes. So this is saying that we can't make changes to a prior report, right? We can't do that. That's just not it's signed off, it's finalized, it's locked down. You're not gonna. That's the whole point, right? We can't go back and change it, right? It's, if you want to make a change to the Constitution, right? We need to make amendments to the Constitution of the United States. You can't just go back and start editing things. It does not work. So review the previous report and make the changes. Nope, not the case. What about read the current report? Okay. Compare it to the previous report. Okay. And obtain a letter of representation from the successor auditor, right? That is going to be the case. So when the predecessor auditor considers reissuing an audit report, the predecessor should read the current auditor, successor auditor's report, and compare it to the predecessor auditor's report. The predecessor should obtain a representation letter from the successor auditor addressing any matters known to the successor that are relevant to the predecessor's previously issued report. That is what we are going to do in this situation, right? Make sure you're familiar with these situations involving predecessor and successor. Always a good time. When there has been a change in accounting principles, but the effect of the change on the comparability of the financial statements is not material, the auditor should do what? So interesting question, because generally when we're talking about a change in accounting principles, that's a pretty big deal. But in this case, how it's not material, okay, fine, I guess it can happen. So what are we going to do, right? What's the auditor going to do? Well, are we going to refer to the note in the financial statements that discusses the change? Generally, that's what we're going to do if something's material. Now, because it says it's non-material, we're not going to do that. So our job when it comes to reports, when it comes to paragraphs, right, emphasis on matter, other matter paragraphs, those all relate to material matter, right? So in all material matters, in all material respects, we're emphasizing material things. We are discussing other matters that are material. So I am going to say it's probably likely not refer to the change because it's not material. Are we going to refer to the change in an emphasis and matter paragraph? So again, that kind of is the same thing as letter A. So I'm going to cross that off. And then what about explicitly state whether the change conforms with GAAP? No, I'm just going to say no, right? So unless the auditor's report explicitly states otherwise, the auditor's report implies that the auditor is satisfied that the comparability of financial statements between those periods has not been materially affected by an accounting change in principle or adjustments to correct a material misstatement, right? So there may be no effect on comparability between these periods because either no change in accounting principle has occurred or there's been a change, but the effect in the comparability of the statements is not material. So when no material effect on these comparable financial statements results from a change in accounting principles or an adjustment to correct previously issued financial statements, we are not going to refer to the consistency in the auditor's report. And what's my down to earth thought process on this? Well, simply put, we don't want to confuse the users of the financial statements, right? If something's, and I'm gonna not off the record, but I'm gonna take it down to a very casual record, a casual note. If it's not a big deal, don't talk about it. Don't confuse them. We only want to tell the readers, the users of the financial statements, about things that are a big deal, things that would actually influence the decision to invest or to lend to the company, right? So we don't want to confuse them and give them information overload. This is not material. It is a nothing burger, right? Not a big deal. All right, during a review of financial statements, an accountant decides to emphasize a matter in the review report. Which of the following is an example of a matter that the accountant would most likely want to emphasize, right? So generally, these are going to be items that are in the notes to the financial statements, right? So you're going to emphasis the matter paragraphs. Again, to repeat that, they are generally going to be items that are in the notes to the financial statements, right? And which of these would be in the notes of the financial statements? So entity has significant tax expenses as a result of a new tax law. So, not particularly here. I'm not going to really say that. That's not going to, likely be there. But we've got some classic examples here of items that will be in the notes of the financial statements, right? So if the entity has had significant transactions with related parties, you bet that better be in the notes of the financial statements on the account of management. So that's going to be definitely a contender here. What about other entities in the same industry have recently changed from LIFO to FIFO? We don't care about other entities in that sense, right? Yes, if we change from LIFO to FIFO, that would be a note, but other entities, not worried about that. And then what about the IRS has notified the entity that it intends to audit income tax returns for the prior years? Right, that's not a big deal for the investors to know. That's not going to be in the notes of the financial statements, unless that creates a going concern issue or something else that would realize itself into a note to the financial statements. We're not going to include anything like that, right? So simply put, right, all of these are going to be related to items that are material, items that are notes to the financial statements. These are going to be emphasis and matter paragraphs, right? That's what we're talking about here. Emphasis and matter paragraphs that do not affect an auditor's unmodified opinion. Right? We talked about related parties, and there's going to be so many others, but make sure that you are familiar with these. But you can very much see that, again, if you've taken FAR, all of these items are things that you would have seen in the notes of the financial statement. So just want to, again, point to that, show the similarities between audit and FAR. They create the financial statements. You have your similarities. You have your comparables to actually talk about those things that management has come up with. That is what we're dealing with here. Final answer is going to be letter B. Awesome. Wonderful. It has been a good time. It's been a wonderful time running through these questions with you. Stay strong. Keep fighting the good fight. I believe in you. Have some strength, accountability, and you'll get through this. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.